Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on ITM Trading. Thrilled to welcome back Chris Whalen. He's a titan in the world of finance. He's the chairman of Whelan Global Advisors and has been a trusted voice on Wall Street, predicting major events like the Lehman Brothers collapse. With decades of experience at the Fed, Bear Stearns, and beyond, he's here to unpack the risk lurking in today's banking system, the Fed's next moves, and what it all means for your money. So buckle up. Do we have a episode for you today? Chris, welcome back to the show. Nice to see you again.
Thank you, Danielle. I appreciate all of that introduction. Hope is true.
Absolutely. Thrilled, like I said, to be speaking with you. Obviously, we'll talk about your thoughts on the banks. Our last a conversation went viral on that topic, but I wanted to start with this with you today. Just out now, foreign central banks now officially hold more gold than U.S. Treasuries for the first time since 1996. So I'm letting that sink in. But what is that telling
Wow.
us, Chris?
Well, global central banks have been buying gold pretty aggressively for the past 10 years. It has accelerated with the arrival of Donald Trump in the White House. And I think what he is doing is moving the end of the special role of the dollar as global money, as a default reserve asset, much faster than we expected. I think that total reserves in dollars is going to drop well below half in the next couple of years. And I think gold is going to return to preeminence as the default reserve asset. You already see a number of regulators allowing banks to hold gold as capital. It's now collateral for swaps. And I think, unfortunately, the lack of discipline in the U.S., the governance problems in the Congress, which are obvious to everybody, it's eroding confidence in the dollar. And Donald Trump is doing nothing to help. He likes to be the center of attention. He likes to stir people up. I always tell my clients, take him seriously, but not literally. But unfortunately, he has antagonized so many of our allies around the world. He's just encouraging people to look for alternatives to the dollar. This was really started by the Chinese and the Russians. If you go back to the opening of the Shanghai Gold Exchange in 2002, it's just been coming for a long time, I think.
Chris, it makes you wonder if it's by design then, because he has been vocal, this administration has been vocal that they want a lower dollar.
Yes. Well, Stephen Mirren, the fellow that they nominated to take up the remainder of that governor's term at the Fed, has said that he wants to sell gold to weaken the dollar. He has analyzed the strength of the dollar, I think, incorrectly. If you want paper to go down in value, you buy gold. And as my friend Jim Rickards and I discussed in my last book, treasuries should be selling paper and buying gold very aggressively.
So when we're talking about gold as the reserve currency, am I hearing you correct, Chris? I mean,
Reserve asset. It's
reserve.
fungible. That's right. You can
So,
borrow against it now. People used to see gold as a dead asset, but if you have gold in vault, there are a number of banks today that'll lend you 90% of the value.
so how does that position the United States then via the world?
It positions us to become like everyone else. We're going back to a multilateral currency market where we will have to compete with other nations in terms of our economy, in terms of our balance of payments. The last time we really had a problem in the U.S. was really the 70s when Richard Nixon closed the gold window. John Connally famously said, it's our currency and your problem. But this time around, I think that the rest of the world is going to be taking their cues from the Chinese and the Russians and the Europeans because we don't have the same confidence, we don't have the same credibility that we did 50 years ago. And unfortunately, our politicians are accelerating this process.
Right. And I hear you loud and clear. I guess I always just keep coming back to the thought that will the US must be seeing this unfolding, and do they have any cards to play that could stop this? We're going to get right back to the interview, but first, here's an important question to ask yourself. When the next financial crisis hits, how well are you prepared and how diversified are you? My goal is to help educate you and prepare you for what's coming up. I've been covering this market for over 2 decades, and what I'm seeing now is something that is completely unprecedented. We're entering a phase where timely decisions aren't optional, they're essential. So if you want a playbook to make powerful decisions, click below and download our free guide called the Private Wealth Playbook. It's about using gold and silver strategically for the highest levels of protection, privacy, and performance. This is a data-backed guide which will help speed up your understanding and get you right in position quickly. Most importantly, it's set up to position you for long-term wealth and financial security. So if you want to stop second-guessing the economy and take control of your wealth, go to DannyReport.com or click on the link below and download the Private Wealth Playbook right now.
Well, it would take a change in our government and our leadership. I think, Donald Trump is currently pandering to the crypto crowd because they're financing Republican campaigns for next year. That's where the money's coming from. So they have to kind of almost be anti-dollar, anti-gold in order to keep their friends in the crypto community happy. That's not going to help the value of the dollar. I think the whole crypto phenomenon is basically another way of saying we're concerned about inflation, we're concerned about where the U.S. government is headed, the deficit, everything else, right? And so people want to escape a system that they see is sinking. That to me, when you put that together with the rhetoric we hear from the White House, it's a recipe for disaster. I expect to see a significant sell-off in stocks at some point, largely driven by this whole macro issue, Daniela.
Worse than what we saw in April?
Yeah, it could be. April was a great buying opportunity. I just kicked out a lot of my stocks that I bought during that period. American Express, Fannie Mae, did very well on them. But I am concerned about the banking system, as we've discussed before. Where's the growth in the bank loan portfolio right now? Non-bank financial institutions. We've got over $1.2 trillion in loans to these guys, so we've got $4 trillion in unused credit for non-bank financial institutions. So that kind of makes me a little concerned.
Yeah, wait, just hold that thought. Hold that thought. I want to get right back to it, but just the point about the crypto, because my friends who are some friends, let me rephrase that, who are Bitcoin maxis, will use that as the argument to hold Bitcoin, that this administration is so in favor of Bitcoin, crypto, whatever you want, however you want to label it.
Well, I think it's a short-term trade. I point my friends in the crypto community. I know a lot of them. They've done very well, but I say, look, my friends in Asia, they play with coins, but they buy gold to protect their
Yeah.
wealth. They buy real estate to protect their wealth. You gotta screw your head on tight. Crypto is just I think a passing fancy. Bitcoin was a very clever game, the way it was constructed. But at the end of the day, this is something for nothing. That's all it is. And while you may have contempt for the fiat paper dollar, it is legal tender. You can buy groceries with it. Crypto doesn't yet have that same dimension. We may decide to do something crazy like declare crypto legal tender, but that just takes us back to before World War I, when this country was in chaos when it came to money. And Americans have argued about this almost since inception. There's only been, 50 years when we actually had a federal gold standard? Not even. So the rest of the time, we were all arguing about this. Maybe we're going to do it again. But I think the special role of the dollar is done, Daniela. I really do.
Wow. 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 Okay. My other wow that you just brought up, because you've written extensively about the structural flaws um, in large dealer banks like JP Morgan and Goldman Sachs. The last time we spoke, you said, the banking situation is echoing what you saw in World War II. So talk to me about the concerns, genuine concerns you have with the banking sector, Chris.
Well, banks have been riding kind of for free really since COVID, because when the Fed dropped interest rates to zero, what they also did was drop the apparent cost of credit to zero. You still see this in home prices. Home prices are so strong that the
Yes.
default rate on 1 to 4 family mortgages owned by banks is zero. Now you compare that to what's going on with apartment buildings and commercial real estate, which is really tough. We're seeing 100% loss on those loans when they default. So when you compare the two sectors, you say, what's going on here? It was kind of the Fed playing, God, really, with the U.S. economy and trying things that they weren't sure would work, but they did them anyway. We see something similar going on today with reserves. If you look at the FOMC minutes, what they tell you is they're going to continue to shrink the balance sheet, even though they're not sure what's going to happen. That's scary. We could see another sell-off like the end of 2018, simply because the Fed is willing to use this model for GDP to figure out how much reserves they need in the money markets. I find this rather disturbing. There was a great piece that Bill Nelson at Bank Policy Institute put out this morning in his blog. I really recommend that people read that piece, because you say to yourself, what are we doing here? I thought Powell was more careful than that. So I am concerned about credit risk for banks coming from non-bank financial institutions. The numbers are really big. And where is this obvious? It's in the stock market, Daniela. When you see stocks racing ahead, when you see all this private equity being put out there in the public market, because the private equity guys don't want it anymore, it tells you that we, I think, have a problem with value, and that problem may get corrected sooner rather than later.
So, Chris, for the people hearing this at home, they're thinking, well, Chris, what do I do here? Should I be getting out of the banking system? What are you telling me?
No, I think you've got to be cautious. I still have most of my more conservative positions. I haven't sold my Nvidia, by the way. I have a sell loss underneath it. It's $170, but it hasn't touched it yet. So what are we going to do, right? I have been buying more defensive names. I've been accumulating Annaly, which owns a lot of mortgage backs. But for me, I'm looking for the next buying opportunity. May come from President Trump, may just come from the banking sector. But I do think we're going to see more volatility as we go into the end of the year. Look at Jamie Dimon. Jamie Dimon, what is he doing? He's loading up on T-bills. He's going long duration after a long period of being more or less neutral. So he's expecting rate cuts one way or another, whether it's voluntary on the part of the Fed or whether they have to cut because something happens.
What do you think, Chris?
If Mr. Mondami wins the mayor's race in New York City, I think we could have a couple of banks roll over in that market. I'm not going to mention names because I don't like to talk about banks that are still open, but I rated most of those institutions when I was at Kroll. They own multifamily apartment buildings that are being attacked by progressives in New York. That's not a good situation. I really am concerned about this because progressives are getting more and more socialist in their outlook, and they think that everybody who owns property is the enemy. Well, where are people going to live, Daniela?
I don't
We
know.
cannot demonize people and basically force them out of the New York market and then talk about affordability. The only way you get affordability is if you build new, and New York is an old city. We should redevelop half of New York City. But the will's not there.
As a New York City resident, I am very concerned, but the polls are showing right now, I mean, whether you believe them or not, that he will win as of now.
Yep, I agree with that. Look, people are desperate. Inflation has pushed a lot of people to the wall. And you have literally millions of people who live in the New York City area who shouldn't live in New York City.
That's
It's too
right.
expensive.
Yeah.
And there's nothing we can do to fix this.
So for, again, going back to, the people watching at home, Chris, what are some things that we should be doing to protect ourselves right now?
Well, I think if you're looking at your investments, look at stuff that was driven by momentum over the past couple of years and ask yourself, is this something I want to sit with in a more volatile down market? That's the way I look at my entire portfolio. I've got about 2/3 in treasuries and income producing stocks, preferreds, things like that. The banks are buying back a lot of their preferred stocks because the capital requirements are being lowered by the Trump administration. So I like to look for income. I like to look for stability. I still have some alpha. I mean, you'll laugh. You know what my best position is? Williams, the pipeline company. I love it. That stock's doubled for me. I'm going to
Wow.
keep it forever.
Wow.
Well, they deliver stuff that people
Yeah.
need, right?
Yeah. Makes
Um,
sense.
but but I do think you want to be opportunistic in this market because so much of what we see in the new issue market, IPOs, everything else is really garbage. It's coming out of private equity portfolios or AI. I love AI. You know what AI is, Daniela? It's an electronic parrot. And humans love to talk to things that have a voice. They think it's a person, right? But it's not.
It,
You're talking to yourself.
it has
And so,
become a
so much,
person for so many
oh,
people I
yeah,
know.
it
They're
has
having
become a
extensive
person.
conversations. Like I'm talking to people and they're like, wait, I just had a 2 hour conversation with ChatGPT.
Oh my gosh, we're in big trouble. But
You
I
know?
do think this is a time to be opportunistic and defensive because unfortunately, a lot of the rhetoric coming out of Washington right now is, about having a press release today. Like when they started talking about releasing Fannie Mae and Freddie Mac from conservatorship, well, the Trump administration needed a press release that day. They haven't said a word since. Both stocks have traded off. They're down at the bottom of my equity group now. They were at the top before. And what that tells you is that there's a lot of momentum, both short and long, that's influencing equity prices right now. You look at the bond market's not moving. We're attacking the Fed, we're doing this, we're doing
And
that. The
nothing.
10-year Treasury has
Nothing.
done nothing.
Yeah.
So, the world still wants to believe in us. That's the good news. The
So what
world
about
still wants to do business.
gold, Chris?
I'm long gold, and I'm not going to reduce my portfolio because the same dynamic that has existed with gold for 150 years continues today, which is that it's an arbitrage between what you can make in paper and what you can make with gold. The difference today is gold is no longer just a dead asset that was sitting in your sock drawer. You can actually leverage it. And a lot of investors understand this. So, to me, it's got to be a core part of your holdings going forward.
Just a final point. I know we covered a few things here, and I've had many experts. Actually, I want to send you a recent podcast I did with Mitch Wexler. He's a real estate developer who's been focused on the overvaluation of homes and how out of control it's become that he feels it could really bring down the entire system. Do you think we are facing a crisis of an '08 proportion or worse, Chris?
Well, I did a biography of Stan Middleman, the founder of Freedom Mortgage, who's an
Hmm.
old friend and client for many years. And Stan predicted that we're going to have a significant home price correction in 2028. His basic scenario was eventually the Fed cuts rates. We have a little mini boom in housing that's going to look like last year in the third quarter when you saw loan volumes up a lot. People made a lot of money. But, the truth of the matter is the Fed forced home prices up 40% during COVID. At a certain point, we run out of buyers. So I do think Mitch is correct. I do think we're going to see a correction. How far will it go down? It won't be quite like 2008. I think it'll be more like getting us back down to 2020 levels. That's not necessarily the end of the world, but I think it'll help affordability. It'll let some families get in the market who can't get in right now. It's just way too expensive. So I agree with him. I do think we're seeing a correction right now in commercial real estate, and we're going to see residential eventually. But again, look at bank portfolios. If you look at JP, he owns mostly big mortgages, prime borrowers. The default rate is 0 or negative. They're actually making more money on recoveries than they are on charge-offs. That's extraordinary. And that's the impact of the Fed and the way they've messed around with the U.S. economy with quantitative easing and
Ah,
all this other
yes.
nonsense. Yep, that's right.
Quantitative easing.
Quantitative. It's another way of saying they're going to go buy a lot of treasury bonds. But they
Okay.
also bought mortgages. They still own 20% of all mortgage-backed securities at the Fed. And that fact has weighed on the market. It's kept home prices high. It's kept affordability very low.
Bingo.
And eventually we're going to fix it.
Fix it.
Yeah, buckle up, right? Make sure you have your mouth guard in.
Chris Whalen. I appreciate your thoughts. Really good speaking with you.
My pleasure, Daniela. Anytime.
Yeah, you could call me, not ChatGPT, if you ever want to have a conversation.
Exactly. We'll talk to human beings. What an
Exactly.
idea.
What an idea. Thank you so much, and thank you all for watching. We covered a lot of ground. As always, I urge you to reach out to my colleagues at ITM Trading. There's a link below in the description. If you want to reach out, talk about what we covered, or just start your journey in owning physical gold and silver. That's it for me. Subscribe to our channel also. It keeps us going. Thanks for watching.